What's up, guys? So I just came back from vacation. Obviously, the market is very high right now. We had a very beautiful move to the upside. It kind of sucked because I was on vacation and I didn't want to take trades. I told you guys I was tactically bullish before, so I had some small positions. I also took them off yesterday, if I'm not mistaken. So, I was expecting this rally to happen. I told you guys to be careful. We would most likely have a replace rally to the upside. It happened. We went way higher actually than I thought. I thought we would stop at about 570. Right now we're at 590 almost on the S&P 500. So we're about 20 points higher than where I personally expected the market to then revert back to the downside. So on that one, I was completely wrong. Some of the factors were obviously the Trump administration, and there was a lot of bullish news on tariff stocks and tariff deals. I'm suspecting that Donald Trump basically folded, and I told you guys that in, I think, three past videos of mine that I made a thumbnail saying that, Trump folded, and he did because the market was down 20%. So for me, that right there is very important to talk about because we've learned a lot of things for the first couple of months of the second term of President Trump, and it's important to take notes. One, we know that President Trump has a put. He does not like to see the market down more than 20%. There was also a second put, which was the interest rates of the US 10-year Treasury bill because the US government have trillions of dollars of refinings to do at the end of this year. And that's a big problem that I'm going to also be talking about in this video. It's going to be very important. And this is one of the big reasons why I don't think 2025 is a year where you want to, chase rallies like this. I think you want to be very patient, careful with the market. It's also not a good idea to sell everything and to be all out. And I'll show you guys also data from retail, basically selling everything literally at the bottom and then buying back. Right now, retail is all in again, the market, by the way. But going back to the things that we learned and that are very important is one, we learned that President Trump has a put, it's 20%. We also learned that rates are very important for this administration and they want lower interest rates. And if you want lower interest rates, you cannot have a stock market that's going up. And that's the big fundamental problem right now. And this is why I think that Trump made a mistake because he folded too early. And one of the biggest reason I think he folded as well was not just because the market was down, but I think that President Trump also likes to look at his popularity polls, if that makes sense. So he probably likes to look at how popular he is in the polls, and he probably saw that his polls tanked in the first 100 days of his administration. And I think this is why for the past 2 weeks, basically President Trump has been, kind of going on this political campaign of cutting some trade deals and, putting it all on the internet and yeah, just kind of trying to reassure investors and bring back his popularity higher because obviously it was not looking very good. And it seems to be something he pays attention to and that he likes. And at the end of the day, I'm not here judging. I'm just here trying to understand so we can make as much money as possible. Now that that is done, I'm just going to show you guys on the short term positioning before we look at the technicals. You can see that the red line right here, that's retail. They basically capitulated at the bottom of the tariff wars. And now you can see that they're basically all in. They went all back in the market. And this is why would not be surprised if we see another, pullback in the market. And I'm also going to discuss when that should happen. In my humble opinion, it should happen in the coming weeks. So I think that we're going to enter another window of weakness in the next coming weeks. It doesn't mean it's going to happen, but I think that there's a high probability that we at least have a pullback. How low we could go, obviously that's a little bit hard to say. Could we retest the lows? Maybe. I think it's possible. Minimum a 50% retracement from the movement we just had is very possible in my humble opinion. Obviously, I could be wrong. Also looking at the fear and greed index right now, we're right back at we're right back at greed. And right now with retail all in and everyone basically expecting the market to go back to all-time highs. I mean, what could go wrong, right? And well, I'm going to talk about that. It's basically interest rates. And my model actually just flashed a long signal on rates, meaning that I believe there's a high probability of the US 10-year Treasury going back to retest minimum 5% in the next coming weeks. And that's why, in my humble opinion, I believe that the Trump administration, they kind of did a mistake folding too early because you cannot have a raging bull market and in the same time a slowing economy and lower rates. You need to give some to get some. And I believe that they kind of panicked seeing the market drop like that, and also just the popularity vote tanking in the toilet. But I do think that it might bite them back in the ass, if that makes sense, in the next coming months. And now I'm going to talk about the macro, what I think is going to happen and what I think would be the best outcome. I believe that the best outcome for 2025 is we go nowhere. I'm still expecting a lot of volatility in the market. It does not mean that the S&P 500 needs to break the lows. You know, at the moment on the daily, the means is at 544 right here. It's 7.7% lower. And at one point, we always have a mean reversion. So at one point, we're going to retest this level right here. And then the question is going to be, are we going to have a beautiful W pattern, right? Something that looks like this. And then, we're going to go back to all-time highs and we're going to kickstart a brand new bull market. That is a possibility. Or are we gonna, go lower to these levels and retest, my first bear market target, which was 512, which we got. And then my second target is right here. It's about 540, 545. I'm not sure if we're gonna get that because that's a pretty big drop, if you ask me. That would be, we would have to see a lot of economic pain for that to happen. So I'm not too sure about that. There's one thing I do believe in, and it's the presidential cycle. And usually, a drop that happened like in the past couple of months should have not happened based on the presidential cycle, which is right here on my chart. As you guys can see, this is a chart from Larry Williams. He basically found a way to show the presidential cycle on the chart, which I'm very grateful for. And you can see that basically the bear markets always happen during the midterm. That's next year. But with everything that the Trump administration is doing, it basically got triggered this year when it comes to my bear market models. And right now, what I'm wondering is, are we going to continue staying in a bear market in a risk off environment for the next coming months, which in my humble opinion would be the best case scenario? Because afterwards, that's telling me that 2026 to 2028 are going to be amazing years in the market, and you're going to most likely want to be all in the markets, all have some Bitcoin, right? Be long risk assets with high beta in the markets. And that would be the best case scenario for all of us, because then we're going to have two to three beautiful years where the market is basically just going to keep going up. It's going to be crazy to the upside. And basically, even an idiot will make a lot of money in that type of market environment. What I'm afraid of is that that doesn't happen, and that the Trump administration continues to be volatile. They push the market higher to then bring it right back down because we have, well, not me, but the US has some debt problems and some interest problems. And then that's going to suck liquidity out of the country. And then the market could drop another 20% again, right? That's the scenario I'm scared of. So hopefully that makes sense. I hope that the rest of 2025, we get rid of all those problems and that the market stays volatile until all of it is taken care of. And then we're going to have three beautiful years. And the big reason is Jerome Powell, the Fed chair, is going to be replaced next year. And that's going to be an extremely bullish catalyst as well. Obviously, the market is going to front run that. Everyone knows. And most likely they're going to appoint someone that's going to be more, pro-Trump, right? We're going to have a new chairman in the U.S. that's going to be, pro-Trump agenda, right? And at the end of the day, it doesn't matter about the politics. It's just about the liquidity. And it basically means that they're going to pump a ton of liquidity in the markets, in the financial market. It's going to be crazy. And you're going to have lower rates. Inflation will most likely be higher though. So, we'll see where that goes. I don't know, but I do think that the assets will perform extremely well. So I hope that's the scenario that happens, because the bear market wasn't even supposed to happen this year. It was supposed to happen next year, right? And I was warning you guys about that since actually before we entered the year of 2025, to be careful that 2025 would be a tricky year and then we would enter a bear market. But the bear market, based on my models, already got triggered in March of this year. So I'm just hoping that we kind of go nowhere. We get rid of all those issues to then have three beautiful years. So hopefully that makes sense. because if we just keep going, I'm telling you guys, afterwards we're gonna have another drop of 20%, and it's gonna be a market where everyone gets wrecked and everyone loses money, and it's just not gonna be fun. So hopefully that makes sense. All right, so very quickly looking at the technicals for the S&P 500, obviously we could push to a third standard deviation right here. Not very likely in my humble opinion. I believe we're in the process of topping here. We could go higher, but at one point I would be very cautious. I do believe that we're gonna, have a good leg to the downside again, and yeah, we could basically just, go sideways before, we have an actual breakout, and then we enter a real new bull market, which is, in my humble opinion, the best case scenario. I hope that's what happens. Right now, we also have gaps to fill right here. To the downside, we have two gaps. We are above the 200 moving average right here, which is bullish, and also my bear market model is looking very weak. So we'll see in the next coming weeks are going to be very important, basically. Right now, obviously, I took off my tactical bullish trades that I had. Those were small size, nothing life changing. So that's pretty much it. But right now, I'm not chasing to the upside, if that makes sense. I'm going to be waiting patiently for the market to come back to lower levels that I do believe we're going to get eventually. And I think that the market is getting ahead of itself too quickly. And it's all about, the bullish news that came from the Trump administration. And I think that's a big mistake. They should have been more patient before, starting to go on this campaign of wins. And I understand it's politically driven, but I think that it's going to end up being a mistake because now, you have rates going up higher again. And that's going to be the big problem, in my humble opinion, in the next coming months. But I do believe that Q4, after Q4 of 2025, I think you want to have big positions in the market. That's for sure. So hopefully the time zone makes sense. I'll let me know if I change my mind based on the data that I'm looking at. But that's pretty much what I'm seeing right now. Yeah, and afterwards at the end I'll talk about Bitcoin and Tesla as well. But the bigger picture, just wanted to show you guys the sharp ratio. It rolled over, so this is good. So if you're buying, you're no longer by a crazy valuation. This should go back up again eventually. But you can see that historically speaking, before the sharp ratio really gives us a good, long-term buy signal, the means is lower than where we currently are. Still after this drop we had and the recovery we basically just had in the past 2 weeks. And then just looking at the seasonality before I change subject and I talk about obviously the bullish momentum for Bitcoin and Tesla. I just wanted to show the seasonality so you can see that mid-May, to June, if seasonality happens again, minimum we're gonna consolidate and go sideways to down. So there's a higher probability that we start going back lower very soon in the next coming weeks. All right, so before I forget, just want to talk about the bullish signal I got on Bitcoin. I made a video right before I went on vacation because I knew I would most likely not be able to make another video. So when I made that video, we were at about 93,000, if I'm not mistaken, right here in that ballpark for the price of Bitcoin. I told you guys my trend following model triggered a buy signal on the weekly and monthly time frame. In the same time, those are extremely bullish signals. And I basically explained that I was selling options against Bitcoin proxies to collect premium, and that we did not, need to go up 40% for me to make 40, and we just needed to, go up and slightly grind to this sideways, basically sideways action, and I would collect premium and I would make a good return on my money, and that's basically what happened. Right now, I'm a little bit disappointed though. Bitcoin is kind of stagnating here at a second standard deviation, which is kind of normal based on probabilities. But when we get these crazy signals, like that's when Bitcoin can really start pushing against probabilities, and it could push to about 120,000, 130,000 if obviously we kick in a brand new bull market in the equity market, which I don't think is likely. So right now I have mixed signal from the entire market. It's very hard to trade, by the way. If you're like profitable right now or break even, you're a very good trader. I'm break even right now, by the way. Well, I mean, I made some good money because I did buy in April. but in short-term trading accounts, I'm break even. So, don't feel bad if you didn't make a lot of money in the past months. It's very normal. And for me personally, I'm just waiting for the brand new bull market, and I don't have those confirmations yet, if that makes sense. And I hope it, gets dragged into next year so we can have like 3 really good years, if that makes sense. But for now, I'm tactically still bullish on Bitcoin. So hopefully that makes sense. When my trend following models tells me to get out and that we're going from bullish to neutral, I'll make a video about it. For now, nothing changed. It's still telling me to stay on the long side. All right. So I'm still going to continue collecting premium. And until that happens, then I'll get out of my positions and I'll move on. That's it. But I'm very cautious, especially coming into the next coming weeks. I told you guys, most likely we're going to see the broad markets have a small pullback minimum, in my humble opinion. So hopefully that makes sense. Then Tesla made a video as well. Told you guys in the thumbnail, I made a bullish thumbnail with Elon Musk. I told you guys he pivoted. I told you guys that nothing changed on my thesis for Tesla. It was just the way Elon acted and what he did, becoming the head of Doge. That was the problem. It was a management crisis problem, which sucked. As a long-term investor, I was not happy with that at all. But I knew that, there was only two options. One, Elon pivots, or two, he gets ousted as CEO. He just pivoted. He's exiting Doge. And that's why the stock had a monstrous rally right here. And right now you can see that we're basically at a third standard deviation. So obviously that's not sustainable. I'm expecting basically Tesla to top here at these levels. It could continue going up because Tesla is also pumping the stock, and they're posting a lot of amazing video about Optimus, which is all the technology I kept talking about for like more than 8 months. Nothing changed. My thesis hasn't changed. I have minimum always 10% of long-term portfolios allocated to Tesla. And then you want 10% also allocated to Bitcoin long term. I did take profits. I had to trim because I had at one point, I don't want to disclose, but I had so much in Tesla, it's not even funny. Bitcoin as well, right? So I personally, based on my risk management and my percentage in my portfolios, had to reduce my size by a lot, but I never went below 10%. So hopefully that makes sense. And right now I'm expecting, Tesla to probably have a pullback, but it's going to be, again, it's going to be a buying opportunity. So don't be scared. And then obviously, you want to be buying Tesla when we're in the green zone right here. This is when it's undervalued based on standard deviations. And obviously, when we're in the red zone right here, it's overvalued. You don't necessarily want to sell everything, but you want to take a little bit of profits. And for sure, you don't want to be buying at those levels, right? Right now, we are about 5% higher than the means. Right now, the fair value is 323, in that ballpark. So every time we go below, and I do believe we will go back below, I think we're going to go back, if I am correct, that the broad market is going to have a hard time for the next coming months before we enter 2026. I think that there's a high probability, if I am correct, I could be wrong, that Tesla, goes back a little bit lower than its fair value. And then obviously you're going to want to be buying. You don't need to be precise when you're buying, to the penny, but at least you want to be buying when okay, now I'm below the fair value, we're undervalued. I can start nibbling a little bit and I can start dollar cost averaging. And then obviously you can use the DCA Smart indicator that I give access for free down below in the description. And then you can go on smaller time frame, weekly, daily time frame, and you can start dollar cost averaging systematically with no emotions. So hopefully that makes sense. That's pretty much it. Hopefully it's not too confusing. I'm not 100% sure of what's going to happen. Being quite honest right now, it's very hard to have an edge in this market where you have a president that's controlling the stock market with tweets. Right now, I just know that there's still going to be some problems ahead. So I would be cautious, going all in. I'm not doing that right now. It doesn't mean we can go back to 6,000 on the S&P 500, but I mean, it's all about risk reward. And at those levels, in my humble opinion, the risk reward is very poor to be all in the markets again. And that all of a sudden, the risk reward is better to have a lot of cash. That's my 2 cents. So hopefully that makes sense. And sorry if the video is very long. I wanted to talk about more stuff, but because I did not make a video for almost more than a week, there's a lot of information. So hopefully that makes sense. And see you in the next video. Stay blessed and God bless you. Thank you for listening.